came out of a coma.
Oh.
And so yesterday, her family took her off the ventilator, and she died.
Oh.
So it's very emotional time for us because she was such a sweetheart of a lady. And as her husband said, the most selfless woman he's ever known. And yeah, so anyhow, so at the same time, we're rejoicing in the fact that she's walking the the hallways of heaven with the
Yeah.
Lord and doing whatever they do.
That's right.
It's a realm that we're totally oblivious to. So anyhow,
that is it's tragic.
yeah,
And
it is tragic.
Unexpected, I take it.
Well, 3 weeks ago today, she was fine. Yeah, nobody knew that there was a problem. So from just less than 3 weeks, from nothing to boom, she's gone. So it's that makes it hard.
Yeah.
So we're praying for him a lot because this is going to be heavy, way heavy on him. He's going to have moments of just
of course,
emotional breakdown and
yeah, of course.
But we'll be there for him. He's got his family. She just became a grandmother just a couple of months ago.
Grandmother too.
What's that?
You said grandmother as well.
She became a grandmother just 2 months ago.
Wow.
Yeah.
Wow.
Things can change quickly.
In a heartbeat. Audrey Lynn, you just joined in. Your microphone was feedbacking. There's feedback on your microphone, so I just muted you. Interesting point of the markets today. Oopsies. At the same time, I kind of feel like that we're cutting Ian off here. Ian, condolences to the family.
Yeah, appreciate your thoughts.
Prayers for those that are grieving. May they find comfort and peace.
Just going to ask you to enlarge your screen.
Thank you. Today's the day. Gold is 56.56. US 30's 46.56. US 30 46.56. So it is exactly 10 ounces today. $10 ounces of gold to get the US 30. On the silver side of things here, we'll get calculator out. 46.56. It's basically 57. But still 10 to 1. 46.570 divided by price of silver 72.53, and it's down to 642. There we have it. And look at how it has bounced off. This bounce here, we came to a low, but that low is just that triple top. So very crucial level here. This is the one to watch for. If we dip below that, we will likely not be returning for a while, except by
is this
drastic
silver?
Intervention.
Is this chart silver, or this chart is what?
This is the US 30.
Oh, okay, right.
We're comparing the US 30 to gold prices and silver prices, just so that we get a clearer indication as to the true value. Because of course, when people go around firing off, U.S. dollar valuation, we're not actually getting a representation of what something is worth. So yeah, this is the US 30 Dow Jones comparing. And I put these numbers up just so that we can keep track of it. So we can see just how much the economy has lost value, even though the numbers say that it's been going up. And it is Metal Mondays, so let's talk about it. Look at this. Remember I was saying, oh yeah, we could probably see that energy build up. Drew this triangle over a week ago. And here we are, still building that energy between the highs and the lows, getting more and more condensed. When that springs out, it's going to be quite the that's going to be quite the explosion. At the very minimum, it will expand 49. That's $31 on silver, one way or the other. $39 going up would definitely bring us into that $112 range. If it were to go down, and this is kind of where we start to look at, okay, well, if it went down, where would that go? $39 down. Yeah, I have to stretch out my screen. $39 doesn't even reach, but it's going to be around $32 an ounce. Does anybody think that that's the energy explosion that we're going to be experiencing? When this breaks out, that energy buildup, we have that 60% rule. 60% of the time, whenever we have a consolidation like this, where that narrowing occurs, where that energy buildup, the highs and the lows getting closer and closer together, usually results in the expansion of the market to the size of the opening. So this opening, after we have this all-time high, then we started consolidating from here. Yeah, basically. Yeah, basically. Let's get a couple of ideas here. So 31 on the outset, 24 on the inset. This banker's candle, we got to kind of take that with a grain of salt. So approximately $25 fluctuation. Well, if that is $25 down, yep, that takes us back into this range here, around $48. And if it were to go up, which is the more likely, simply because of the supply and demand, that the next impulse will likely bring us into that $110 range. So if you've been thinking about getting some silver, gold technically in a downward trend since that all-time high formed January. Currently down 16% from there. Now, if it were to go down yet further, I would expect it to test this trend line. This one's already been tested. Now, it might test this again and bounce up, but if it were to go actually down, if we were to leave this zone, it will probably come and test this line here. But again, supply and demand does not suggest that is going to happen. I would say that if it were to happen, it would be only a result of the ever increasing amount of manipulation that needs to occur in the market in order to keep it propped up. This, gold and silver taking off is very bad for the dollar. And as we know, the Orange Führer is hard at it, making sure that he does everything he possibly can for his masters at securing that dominance of the dollar. Gold silver ratio 64 ounces at the moment. been consolidating quite a bit. In fact, ever since January 30th, really consolidating. I am going to go ahead and delete this long-term trend line, or this trend line that I drew before. And now we're going to be evaluating this from a different perspective. You can see that there's a shelf, or the highs are not getting higher. And simultaneously, we actually have a trend line. Look how that trend line came all the way from there, this low here. What is happening? Does anybody know what's going on here? It's another energy buildup. That energy buildup will result in another breakout. Typically, the size of the break-in. That's a 23-ounce ratio that was experienced in that fluctuation. While 23 ounces down from here, again, I don't think I can, oh yeah, there it is, 23. That'll bring us down to around 40. So what does that mean? You might want to get some silver, because it's not so much, yeah, it's going to be wonderful because this is going to go up. Ian, was it you that was telling me? No, it was yesterday. I was speaking with Wayne Peters, and there are people who are putting options on a $700 ounce of silver. That says a lot. Well, a $700 ounce of silver, let's say gold, and that was for a 2027. So they're saying that, in the next year to year and a half, they're betting on a $700 ounce of silver. Well, if gold were to go through its fluctuation, I'm not sure if there are options being placed. I'm sure there are, but I don't know what the options are on that. But that, the numbers that we're playing around with here, remember we're using good old Fibonacci to help us with that. What we do is that we grab that 61.8% ratio. That's that distance there that we saw with a C. Oh, actually, you know what? It is more than that now because of this. Yep. So right now, this is not even quite. We got to move it up a little bit more. There we go. So that retracement that we've experienced since that all-time high, that retracement indicates that, because that's the 61.8, that indicates another resistance at 8,000. The extension, okay, so again, we got to go by, I'm not going to draw this out right now. The reason I'm going to this is because we're going to evaluate this $700 ounce of silver, whether or not that's accurate. Because if this extension pans out as this war continues, as this battle for energy dominance continues, and remember, energy dominance translates into what in the digital revolution? Data. Gold and silver being needed for those data centers. It would not be, it is not outside of the question for us to see another extension. So the first extension would bring us to approximately $8,000, up from that all-time high of 55, 56. From there, the retracement will likely come back, revisit those old-time highs or that 61.8. The extension is 10,000. What's 10,000 divided by 700? Because that'll give us the ratio, right? 10,000 divided by 700 is 14.2. Oh, funny how that worked. 14.2. That line that I drew here, that is what is that is the ratio between silver and gold that is above ground and refined. That there. So the next drop, if it goes again at 23 ounces, we're going to be around, oh, there it is. We're going to be around here, around 40 on that. That is a 44% drop. Is that right? No. What did I say this was? Let's get this number again. 23. So if it drops 23 from here, that takes us to 41 ounces for an ounce of gold. Still a ways to go. But this is a 30, if you get, let's say for instance you get silver now, you're thinking, oh, do I get gold? Do I get silver? If you get silver right now, gold will be on sale later on. If you get gold now, nothing wrong with that, but that's a hedge. This is an investment because the silver will go up in value, meaning it will be able to buy more gold later on. Your dollars will not. These are the language patterns that I like playing with on market analyses because we need to really start thinking of terms outside of that metaverse, the US. Their in-game currency is in a major crisis right now. And if they cannot secure a means of energy, they will not maintain their dominance over their subscriber base, known as the citizenships. Because what's going to happen, this is the nature of capitalism, to capitalize on all those citizenships, someone else is going to come along with an alternative currency, an alternative means of exchange. Why do you think the Genius Act came out? Because other means of exchanges have already been established for over a decade now. They're mostly digital. And in order to align American dollar with that future, the Genius Act had to be written. And you know, like people say Trump is being stupid. Nope, he's a genius. That's why it's called the Genius Act. And you also have to remember that the only reason he's doing so well is because he made a very good apprentice. Apprentice of what? The metaverse. America. Where am I going with this? If you've been thinking about getting metal, I would focus on silver. If you have a lot of money, I would get probably 40% gold and 60% silver. And by a lot, I mean more than $50,000 at this point. That number used to be $20,000. But now, because gold prices are what they are, and we are where we are in the whole scheme of things, that silver ratio is what you're going to want to cash in on at this point. You'll do better with that than you will with gold. All right, moving on. We're watching tech stocks like a hawk because when this next phase goes through, it's going to be the tech stocks that are transitioning from one form of equity into another. Currently valued with the US dollar, we have Amazon sitting at $211, still riding, maintaining its position above this major pivot point here. So it's doing well at the moment. Oracle also maintaining the higher side of its pivot zone. Google attempting a re-challenge of that pivot zone, definitely dropped far below It will need a good solid rise above the previous high for us to even have faith at this point. Currently, this resistance may very well drive it downwards towards this pivot zone here, currently at 296. Again, if it's not able to maintain that, it will likely test 252. So if you've been thinking about getting stock on Google, you'll likely get it on 14%. Not that I would recommend getting it on sale. I don't recommend getting any of these right now. But it's good to know what's going on, because what we're looking for is, where is the form of currency going? Where is this equity headed? Palantir. We're getting really close in the Lord of the Rings. We're getting really close to that part of the story where we get to have Tolkien's description of the Palantir. So it'll be awesome. Awesome to see the direct correlation. Palantir, the all-seeing eye, so to speak, maintaining its position, doing quite well. You can see that this low, considerably higher than the previous low. It's not really testing that old pivot zone. So that's a good sign for it. It'll likely, and even in here when it came up, it found itself above this old pivot point here. It actually reached up above it, and when it came back down to test, it didn't even come back to test this zone. So that's in a good position for growth. Nvidia did create that low there last week at the end. Oh no. Yeah, that's right. It did at the end of the week there, Thursday going into Friday, the 27th. Things dropped down. Wait a second. No, that's already 2 weeks ago. Oh yeah. So that dip, creating that new low. I gotta remember, I'm on the 4-hour chart, and so I see all the candles, and I'm like, oh, that was just last weekend. No. Remember, they only trade 5 days a week. So this low came down to test this old one here. It did not go below that line. So I'm going to go ahead and draw. Again, we got to be forgiving because it's stocks, but it did not actually meet that low. And at the same time, it would need a strong push getting up inside this major zone. This isn't a pivot zone so much as a high volume zone. And so for us to know that we're actually headed upwards with Nvidia, we would need to see it get way up in here. Japanese markets still consolidating, looking like it actually might break out of this trend line. We'll see what happens. It's not technically any breakout at all, simply because now this becomes the marker right there. We need to get up above that. Japanese markets not doing well against the US dollar, though. We can see that that is an ever increasing consolidation energy buildup. This one here is actually a unique tool. I'm going to bring it up just because it is kind of curious pattern here. That's the sign line. Where is that tool that draws out the I don't know. Maybe I don't have access to it. There's a tool that allows you to draw like it's a logarithmic curve. You can kind of see how that is right now. That there is that's a dwindling energy. Okay, so we've got this rise, right? And then we can see the top side of that curve follows a very similar curvature in that sense. So where is it headed? Well, we know that it is a devaluing currency. It's going to be a race between who can maintain their inflation at a more reasonable rate. America or Japan? That's what this chart is. But the reason why we're following it is because oil! I know it's Metal Mondays, but let's just talk about oil here. Back up to 113. Back up to 113. Oh, there we go. I'm going to bring up crosshair. We are only 4.9% off of the all-time high right now. Basically 5%. When this goes up like that, it's very bad for the Japanese markets. And that will be a major domino to fall because the Asian markets, they don't produce oil like the rest of the world at the same volumes anyways. So this is very hurtful for the Asian markets. China's actually kind of sweating right now. Because they have contracts with energy as well, mostly to the Middle East. The crown, by proxy. So it'll be interesting. If this goes up higher, we're going to see another big spike. And analysts, am I still there? I had a spinning wheel of death. Did I disappear for a bit? Yeah. Okay, so the next... What's that?
We all disappeared.
We all disappeared? Okay. So the next resistance that they're talking about is around $160. That would be a 42% increase from where we are right now. And yes, that will reflect in the gas prices. How do we know that? Well, because remember what gas was like before it went up 78%? Yeah, we all do. That was a pretty big jolt to the system when we saw diesel in Alberta go to $2. What was that one? Was a station we saw in Red Deer, 216 for diesel? Yeah. Going into the cryptos now. Look at that. Bitcoin dominance actually making a little bit of a run for it. Looking to test this range at 59.23%. It's got a ways to go before it goes all the way to 60%, but that is a pretty good attempt. Already, though, this is the 4-hour chart. It went up that far, but it's already being pressed down by the bears. And so what happens next? Well, it would need to stay above this trend line. That's why that trend line is there, so we can see what constitutes a breakout here. Well, this is a good, strong test, but it's not a breakout yet. We would need to see another high get created after this in order for us to say, yeah, this is a breakout. This trend line is no longer good to us. Doesn't tell us what's happening anymore. Yeah, it might give us some indication as to lines in the future, but that's the trend. I don't expect it to stay up, but I've been wrong before. I always think it's going to happen tomorrow. It's going to happen tomorrow. Bitcoin prices, though, that did rise up. That might have been what got this dominance to go up as well. People see the price go up. Ooh, buy some Bitcoin now, quick, before it's too late. People in their reactionary states, right? However, this is a good sign. We do have a good sign occurring right now. We need to see it get back into this triangle, though. Right now, we're still hanging out below this trend line. And technically, we can't use that as a benchmark at the moment because while it's testing that, we have to go by what is current. And right now, I'm going to say this is more of a consolidation than anything, simply because, yeah, we got this trend line forming here. But we've been consolidating ever since this zone here. So I'm going to make a box here. This is our consolidation zone. We got to get out of this before we can say there's a trend. And we can see that it has to get up quite a ways for it to get out, you know? It's a lot shorter of a distance going down, you know, it only has to go down 7%, 8%, and it's out of that zone. But to go up, it's got to go 10%. Not that it can't happen. It's just recognizing we got a ways to go before we can tell what's going to happen. That's why the dominance, I think this is just a big test. Yeah, we're just testing dominance. Price of Bitcoin might still go up, but this price coming up was just accumulation. Accumulation of market dominance. Altcoins are also green since the weekend. So that tells us that there's still money going into them as well. It's just there was dominance in Bitcoin this weekend. Ethereum having a difficult time getting up above this 2150 line. The higher lows are encouraging, but now what do we have? Rising wedge. That's another indication that we might see some energy buildup. But we really got to get above that line. And then again, the next thing is like, look at this. We're still in consolidation all the way from beginning of March, right? There's the box. On the lower end, similar to Bitcoin. We got to get up above that. We got to get into a positive trend line before we can really say, okay, now it's time to set the pending orders trailing that growth. And that's kind of what the strategy is here for those that are looking to maybe make some short-term gains. I'm not saying that you know, I don't suggest anybody go into this expecting to make $1,000 a month. No, 50. Start with $50 a month. If you can make $50 a month doing this, great. And you can do it consistently, awesome. That's worth more than trying things out and winning $1,000 but not really knowing what you're doing. You got beginner's luck and the next month you lose $2,000. It's better off just to make 50 a month in this practice, what I'm about to show you.
Question.
This strategy is, yeah.
How far back do you normally take a consolidation period? Like you've taken that just back to March the 8th or something like that, particularly in light of the 30% drop that happened in between January and February. It would seem to me that whole from about February 1 or 2, that whole time frame is a consolidation period.
Yeah, absolutely. Arguably, you're right. Even this right here. If we zoom in, we can see where that resistance was right there, where it came up, and that was the end of that. And then we had this low and then consolidating ever since. You're absolutely right. And we're on the high end of that consolidation. The reason I'm bringing it down to a smaller number is because I'm looking at the 4-hour chart. When I zoom in, then I need to take that into account when I'm starting to make boxes and all that stuff. On the daily chart, you're absolutely right. That's nothing but consolidation since that drop. No question.
Okay.
What I'm looking for is an entry. When I'm looking for an entry on a daily chart, I'm going to observe the detail of the 4-hour chart. And so if I look at the 4-hour chart, we have not been creating new highs or new lows in this zone here. Even here, on the 4-hour chart, we created new highs and another one here. On the daily, we wouldn't really call this a high because we got this thing that only just happened in February. Does that help? Yeah. It boils down to when I'm looking for an opportunity, I'm looking to analyze that shorter time frame so that I can optimize the entry. When I'm looking at the daily, it's wonderful because I can see the trends more clearly, but it's more difficult to get a pinpoint of when to enter the market. So this strategy, the way that I would do this, I'm going to poise, the reason I'm going through this is because I see the chart being poised right now. It's poised to make a move. If we go to the weekly chart, that's even better. It's poised to make a move. Riding this trend line, it's poised. I've got a notice on my headphones saying the battery's low, so I'm just going to quickly change them out. Check 1, 2. Am I still audible? Let's just make sure that my settings maintain themselves there. Yep. Okay. So with this market structure being poised for a movement, what we do is that we start making a plan. We don't start trading, we start making a plan. On the 4-hour chart, we're in consolidation. And so what we're waiting for is confirmation of a trend. That confirmation can come into 2 forms. Number 1, we might be going down. And it could very well do that. We can make a plan for that. But I'm making a plan to go up simply because we are looking to enter the market as this next phase of the Great Reset occurs, as we see alt season come into play. We want to catch those movements. They're way easier to get and grab and hang on tight for the ride when you know which way it's going to go up or which way it's going to go. Since it might go down, I'm not going to it might go down, but that will be in contrast to the bubble, to the growth of the alt season. And so I'm not going to create a strategy to short this right now because it's just too risky. So we plan our trade now so that as the market meets our expectations, it's like almost like it's going to catch up to what we need it to do in order to execute the plan. It's beautiful. So the idea here is to recognize that this line here is going to be a pivot zone. That is going to be a major pivot zone. So is this one. And so in order to confirm that we're out of this consolidation and we're actually trending, we need the price to go above this line. Once it goes above, that's when you start placing trades. The first trade, first entry that you'll put. Let's see if I can find the right icon. Here we go. You're going to place it on that line. You're not going to start the trade right then. You're simply going to you're going to say, I'm going to start my trade. I'm going to start increasing my position back down behind it. Because whenever we see an impulse, what do we know? There's going to be a retracement. The market goes like this. It breathes up and down. So you don't want to put your money in the middle of the stream. You want to put it where it's going to catch. And the reason for that is because you will have less loss of opportunity. And that, man, I wish I could talk about that for an hour. The cost of lost opportunity is considerably more than the gains that you think you might get by entering the market when it's actually trending. So you want to catch it on the dollar cost averaging strategy that gives you a higher rate of return. So this will provide some resistance. And if it's not that one, it'll be the next one up. But that's okay. If it's the next one up, not a problem. We'll just move that pending order. Let the market come back to you. You'll make more money that way. And it also provides that principle of patience. When you're doing trading, if you find yourself impatient, the last thing you should be doing is making a trade. When you follow this kind of a strategy, it's your patience is easier to obtain, because even if the price works away from you and it's like, I'm missing that trade, I wish it would have come back down here. Yeah, I'm sure you would. We all would have. But it's better to be out of the market wishing you were in than being in the market wishing you were out. And what does that look like? Well, that retracement would be coming down here. And so your pending order will catch it as it retests that old resistance. It might even come down here, in which case that would be okay. We have the indicators saying that no, we've got an upward trend, and that is enough. That upward trend lets you know that it's okay to take a position here, but budget, because you might just go ahead and add a second position lower on. That's the dollar cost averaging. Now your position is at a better price point. You are driving your position, your entry, lower by adding to the position. Now again, don't ever risk more than you're willing to lose. If you're going to lose sleep over any of the money you put in, you've got no business putting it in. So your positions become the trailing pivot points to the trend. I've said that 3 or 4 different ways now. I'm hoping that that encapsulates what's going on. The reason you do that is because that next movement will be another impulse. And as it goes up, while it's going up, you will make positions go the other way, and you will dollar cost average your sells. I'm going to make them red. I don't usually follow that, but it's simplicity. I'm not trying to invoke emotion by picking these colors. Just showing the contrast. These would be your buys, these would be your sells, and you simply position them in advance. So when the price is going down, the plan is to take it 2 pivot points. 1, 2, and then you grab it. That's when you start leaving the position. You might even start leaving here.
So you leave at the next pivot point up, or you leave it at the pivot point, the second
Usually,
pivot point?
I want to cross 2 pivot points. That's my objective.
Okay.
So if I'm down here, I want to cross 2, 1, and 2. Then I just start selling everything after that. If it keeps on going up, great. I'm just going to keep on selling. But what am I doing while it's going up? I'm moving my buy positions to the next pivot points. And then I'm moving my sells to the next pivot points. So when this goes into alt season, and this is another reason why we keep watching the Bitcoin dominance. Look at that consolidation. Here it tempted back in August of 2025, and we thought alt season was here. We were all excited. But it didn't happen. We ended up consolidating quite a bit since then. A few tests up here, we saw some spike prices of Bitcoin there, late 2025. But really, it's been maintaining this dominance ever since August. When we break out of this, I expect it to come down, test this area here, and then retest this line. When that goes down and retests it, it'll be that motion. Oh, that'll be the exciting day. So it goes down and retests at this point here. That's when I would be gobbling up as much as I possibly can, because that will result in this. And honestly, I would have a bunch that you're holding. I would have, as we're going through this, accumulate a big seed of what it is that you want, but then take a little bit of the profits as time goes on, take a little bit of the profits and start leveraging these little tiny movements as it goes up. Why? Because you will, I'm going to grab this tool here. This is the long position tool. So we're going to make some, we're going to be making some plots here so that you can see what happens. The first one, I'm just going to make it like this. So I'm going to risk this much, and my intention is to gain, into this area here. But I want to do that multiple times, not just once. So I do it again when it gets to here. And then I do it again. I'm going to make them a little skinnier here so that we can fit them all in. Then I'm doing it here. Are those showing up? They're pretty faint, eh? Let me just brighten them up a little bit. There we go. So this is how I would do it. Let me just think about that for a second. No, it would be this one. And these are approximately the ratios that I would be going as well. Now I'm on a logarithmic chart, so they're not to scale, but forgive me. That's just the nature of the beast here. I'm just going to go to here so that you can see the potential, okay? If we take the price where it is right now, and let's say we're headed for that all-time high. You know what? Let's do one more, just because that way we get to that all-time high. Yep, there it is. So from here, we get to that all-time high. That's 135%. That's nice. But if we grab these movements little by little, again, have the main amount that you've got, have that big amount, ride that whole 135%. Go for it. But you're going to take portions of it, and you're going to get this 27%, and then you're going to get part of that 27% again, going up this 20%. Compound interest. And then when the price comes back down again, I didn't even do that. Here we go. Price comes back down again. Then you're going to get that 20% on top of the other 20 plus 20. And then when it does it again, you're getting another 20%. See how that works? It's just like those pivot points are just bang on 20%, 20%, 20%, 20%. And you're doing that over and over and over again. And as you're doing that, there's the last one. Is that right? Nope, we still have one more here. And that one's I might have to redraw that pivot point. That's pretty tight. Yeah, I'm gonna have to redraw these pivot points because there's probably a little bit more to do in there. But you could get 4 or 5 trades in between here and that all-time high, each one compounding 20%. What does that translate into? Well, remember, it's the rule of 72. Divide your percentages by 72, and you will have your calculation on what doubles it. Well, 72 divided by 20, that's just a little bit more than 3. So if you get 4 trades in between here and the all-time high on that 4-hour chart, again, I am not saying that you need to pour your life and soul in front of the screen and bleed your eyes out staring. No. If you do this strategy that I showed you, positioning your buys and your sells ahead of time, you might spend 2 hours a week. Simply recognizing that you do not deviate from your plan. If you don't deviate from the plan and you win 4 trades, you will double that little tiny portion that you started with. Again, don't do it with a whole amount. That's putting all your eggs in one basket. Diversify. But let's say you take 10%. You've got a whole amount that you're going to ride that 100%, 135%. Let's say it doubles. You're going to take 10% of that, and you're going to double that portion. So now, instead of just getting a double on your returns, those little doubles that you get along the way, those little trades that you get along the way, will take that 10% and increase it to 20%. Now you got 20% of your balance that you're leveraging instead of 10%. What do you do with that 20%? Do it again. Take half of your winnings, put it in for the long haul, use the other half, and double it up again every 3 trades. So you are now increasing, you have a strategy now, a money management strategy that allows you to increase the size of your balance while you're increasing the value of the balance. Einstein said, one of the greatest mysteries of life is compounding interest. And that's the strategy, how you amplify that for yourself. By the way, did you know that if you are a professional trader, if you're doing prop firm trading for, say, a banking institution or something like that, and you are not doing this strategy, you will be fired. Midnight. Bouncing off these lows. Love it. It's on sale for 4.1 cents right now.
Question.
Yeah.
Your last comment about being a professional trader. Do those guys have programs where they can facilitate all those little notches without having to sit in front of the screen the whole time? And okay.
Yep, totally. Their job is to simply watch that robot play its strategy out and just supervise it. Yep, great question. ADA still consolidating. We had that dip going down below this major pivot point here. We had that trend, even encouraging trend up here. Didn't pan out. In fact, it went back down below. But look, over the weekend, popped back up over top of that red. That's a crucial zone. We can get up above this, use it as support. That'd be encouraging, very encouraging. Once we get up above that 30-cent line, you can bet your boots I'm now full bull. Right now I'm bullish only because, you know that if you buy now, you're just increasing the amount that you can use during recovery. Remember, market recovery takes us back to $3. So 25 cents, that's more than 10x. 11 to be precise. That's where we're at right now. However, to know that we are starting to head back up towards that all-time high, I would need to see on the daily chart a full clearance of this whole zone. We need to get up above it and bounce off of that yellow line. Use that yellow line as support to challenge the next big center there. Once we see that, then you can bet your boots I'm going to start using that 4-hour strategy to maximize on these little weekly movements. XRP we might not be looking at this too much longer. Over in Next Gen Merchants, I posted an article. I shared that with you, Ian, about how SWIFT system, the banking system, known as SWIFT that facilitates the exchange of funds between institutions. That was what XRP was supposed to replace. That is what a lot of people have been excited about XRP since the very beginning of its inception. But there is always in the back of my mind this feeling like, how on earth are banks? Now remember, they are part of a worldwide criminal mafia. That's their job, is to maintain the mafia's metaverse. Why would they want to have this private institution known as XRP come together and make a blockchain and use it? They're not going to do that. They don't have control over that. So, sure enough, at the beginning of March came out that article saying that the banking institutions are going, the SWIFT specifically, has already created their own blockchain to help transition the banking system into the Great Reset with the SWIFT system. It's just an upgrade. It's an upgrade of the existing SWIFT system. To me, based off of the albeit very biased opinion about banking and their employment of a private corporation's blockchain, I feel like that article was a nail in the coffin for XRP. BitTensor maintaining its position above that pivot point. We had this, shoot up there 24th of March. This growth coincided with a lot of partnerships. BitTensor just went ahead in this area here. Imagine that, eh? At the all-time, just off of the all-time lows. That's when BitTensor and NVIDIA sign a contract together, where NVIDIA is going to be providing chips for compute for BitTensor, which is providing cloud processing for Meta, Gemini, Llama, Gemini, Grok, all of the major models that are out there for the big tech companies. Could very well come back down and test this level here. That would make sense for it to do that. Once we break out of this pennant, this long, and again, we can't really get a whole lot of data out of this because it's pretty new. It's a fairly new company, but I can tell you right now, I'm watching for it to rise up out of this zone, out of that pinching zone. That's when we're going to see this take off. Fetch. Hanging out at some lows from all the way back from December 2022. Need to see it create some higher highs. Hasn't done that for a while. Polygon, basically all-time lows, just sitting underneath 9 cents. We've talked about this in the past, how it's going to be a position. It's positioned to facilitate specifically mobile gaming. I was thinking, oh yeah, it'll be for gaming. It's actually really positioned for mobile gaming, and the reason I'm saying that is because different phones are coming out nowadays, and they're blockchain enabled. HTC has a new model coming out that actually integrates with Android and blockchain. But there's a phone, can't remember what it's called, but it is a blockchain phone. So when you get your phone, you got to create a seed phrase. It's like a cold storage device that acts as a phone. But that blockchain, it's on Polygon. So I think Polygon is going to be more so for the mobile gaming side of things, and that on, other devices like our computers, It'll be a free for all. It'll be a lot of different tokens simply because of this expansive selection of wallets that are out there. Which brings us back to why Midnight is so awesome, because that interoperability between all those different chains is what's is their goal. Look at Desync coming back, going back on sale just for us. Just for us. 1.4 cents recovery on this. Let's say the price comes back to where I started buying in 2024, June 2024, right here, the middle of June. If it comes back to that, it'd be a 15x. Oh, sorry, 12x. Ooh. Recovery from here takes you 35x. And that will be kind of where we start to build a foundation for the rest of the growth. Where will it go after that? Who knows? But 25x, mathematically, 25x from where we started makes sense. Where's 25x from there? It's around $5. $5 from 1.4 cents. Well, so that means after recovery, $5 is 328x. Why? Why would that occur? Because Desync is a leader in privatizing storage using blockchain as a means to authenticate your access. As secure as you can get without having to buy a server. And cheap. If you wanted to have a server for all of the media that you were to, and I say media, I mean data. Typically speaking, the average size of server that you would need, today's prices would be about $7,500. You'd need $7,500 to buy a server that will last you about 10 years of data. Based on the current generation, the average use that people create right now. You want to privatize that? That's what you're looking at an investment to do. With blockchain, however, you're looking at about accumulating $4 a year. So your first year would be $4, your second year would be $8, your third year would be $12. Your fourth year would be about $16. That's the difference. When you start decentralizing this compute, you start decentralizing storage, you are now on a shared network. You don't have to come up with the infrastructure. It's called DePIN, Decentralized Physical Infrastructure Network. That's what Desync has allowed people to access. A decentralized physical infrastructure network for storing data. Clearpool down at Lowe's. This is another decentralized infrastructure network provider. It's going to be companies like Desync that leverage Cpool. Beam, gaming ecosystem, all-time lows, beautiful. In fact, looks like it's creating lower lows. Superverse, same idea, having a difficult time getting back up above its previous resistance, 14 cents. NPC looking to break out of this long-term trend line. Buildup of energy is already starting. These guys are just funny. It's just a meme. Kind of like Bitcoin. I know it sounds funny. They're all just meme coins. communities of people coming together with a common goal, with a common vision, and getting crazy about it. SPX, not among the least, that's for sure. Bouncing off of bottoms. You know, it's crazy. Out of all of the things that are out there, you go and you look online and you see the prices go up and down. And whenever the prices are down, all of these ecosystems, all of these coins, all of these people that are holding the coins, they go, woe is me. Oh, how terrible it is. The prices are so low. When will this end? Come on, alt season already. Not SPX. This community is ravenous over this vision. As the prices are going down, their activity online goes up. Even people who helped found Bitcoin comment on SPX and say, man, those guys remind us of us back when we got started. They're not going to stop. They're not going to slow down. They're not going to give up. That's market analysis for today. I don't always go through all of the charts, but when I do, I take an hour. Questions and comments? Concerns? Anybody see some news that we should chat about?
I've got a question in the chat.
Ooh,
Goes
thank
back
you for drawing my
to
attention
your
there.
earlier points.
When you say 50K, do you mean someone that has that available now to invest? Yeah, I would say if you're considering making an investment of $50,000, that's when I would start ratioing the gold and the silver. If it's less than 50,000, you might get 1 ounce of gold and get the rest in silver.
So it's not about
Simply
your total, like what a person, if a person has a total amount in metals and it's in, like if they have it in silver. I'm just trying to understand the concept. I don't have 50,000.
Right, no, but the question is
But,
good.
like if someone, okay, let's just take 50,000 as the amount. If someone was sitting here with 50,000 in silver right now, and they could invest another, let's just make this up, 5,000, would they just put that 5,000 in silver, or would they put 40% or 20% of it or whatever in gold? According to this strategy, I'm not asking you to tell people what to do.
Yeah. I hear you. If it was me, I would just get an ounce of gold.
Oh, really?
Yep. If I had $50,000 of silver and I wanted to add to my metals, I would just get an ounce of gold.
I thought you were going to say the opposite. So this is where I realize I'm not understanding it. So, because I thought it would be like if you're investing new money, put it into silver. But you're saying if someone was investing a lot, they could put a portion of it in gold and a portion in silver. But if they're just got a smaller amount to invest, that you would have them balance it out with some gold. Is that the right concept?
And for clarity, you're asking great. This is a wonderful question. It really is, because it speaks to the necessity of planning, and the planning is not complete. You shouldn't even go and buy anything until you have an exit strategy. That's the key to this plan. From what I'm hearing, the example that you're asking is, what if I've got $50,000 worth of silver and I want to get more metal? Am I correct in that assumption?
Yeah, if someone, yeah.
Yep. If I didn't have any gold and all I had was $50,000 of silver, at this point in the whole scheme of things, wow, that was
that was nice.
I've got a little bit of a cloud of green there. I would get an ounce of gold if I was to add to that trove.
And is that part of the exit strategy that you speak of, that you start shifting from silver to gold? Or is that, I don't know if I know what an exit strategy is in metals.
Yeah,
I'm
exit
very
strategy.
new at all this, so this is probably really repeat for people, but
No, I don't think, even if it is repeat, it would
good
probably be
review.
good for review. Yeah. Yeah, this is good. Because it's been a while since I've talked about exit strategy on gold and silver.
Okay. Because I think a lot of people, like the people I know locally or a person I know locally, they are just all metal. Do you know what I mean? Like I don't think they have an exit strategy. It's just how to convert more fiat to metal.
Yep.
And so that's a
And
certain trajectory that a certain amount of people are on, right? Like it's all in the metal. It's all that's the kind of saving grace. And so I'm interested. I've heard of exit strategies for for stocks and stuff. I'm not saying I knew what they were, but I've heard that term. But so I'm just curious to learn more about what exit strategy is with metals.
it's such a good question. When I'm talking about exit strategies in this context here, those are short-term trades, right? So my exit strategy is going to be way different for something
Yeah.
like this.
Yeah.
In fact, my exit strategy is going to almost entirely be based on the value of in the value of this in comparison to the US dollar.
Right.
With metal, no, it's a different asset class altogether, and so my exit strategy is different altogether. My exit strategy on metal is the ratio of silver to gold. That's the exit strategy because this tells me more about the value of gold and silver than its value denominated in dollars. The dollar is a collapsing asset. It is not meant to be held. It is not even meant to be regarded as a storehouse of value. I remember in 2000, what would that been? 21, 22, during alt season, I was not in it. I was waiting. I wanted to watch that cycle go through before I started committing any money. So I watched it. But what I did while alt season was going on and cryptos were the talk of the town, I started talking to financial advisors that dealt with insurance and investment strategies, like Manulife and Sun Life and all these big, huge companies. And I wanted to get a feel for what are they doing to help their clients? Because the next time this happens, it's going to traumatize people as to how much of an opportunity they missed. So I talked to them, and you know what the 99% of them told me? No, I will never advise my clients getting into crypto because, and I quote, it's too speculative. And I did. I
Audrey
asked
Lynn is
them.
laughing.
Yeah. Well, Audrey Lynn's got a story, and she's going to tell it on Wednesday night. The dollar, and this is what I told them. I said, well, you're speculating that the dollar is going to increase in value. And I've been teaching people since 2008 that it's not designed to do that. So if you're so scared of speculative markets, what the hell are you doing helping people get into the dollar? Like, come on. Please don't tell me you're that cognitively dissonant. But yeah, people are. In fact, I talked to a guy who was even in crypto. He had his own blockchain. He was so proud of it. It was an L2 under XRP. He was so excited about his crypto. I asked him, I said, what is it that you like most about your little ecosystem? And he said, well, because we've got a two-sided coin. One of them is the one that, goes up and down in value. It's got the volatility, so you can invest in it now, and as it grows, the ecosystem will. But then this other side of the coin is stable with the US dollar. And I did. I laughed. And I said, why would you want a side of your coin to be valued with something that's being deliberately collapsed? And you know what he said? That'll never happen. And the reason and I said, "Oh, what?" I was thinking, like, immediately in my mind, I was ready to be defensive. It's like, "Oh, I'm just a stupid backwater bastard from nowhere in Alberta. So why would you listen to me, Mr. Silicon Valley? I'm a great big, blockchain hero. Why would you listen to me?" But no, I actually took a pause and I said, "Whoa, what? How do you know that? How do you know that the dollar is not going to collapse?" And he said, "Because the US is military." I'm not kidding you. I'm not kidding you. That's what he told me. He said the reason why the dollar was not going to collapse was because America's military was just too damn good.
Ouch. Ouch for people. Ouch.
I'm going to give him a call. I don't know when, but I am going to give him a call one day. So, exit strategy.
Well,
for
you could
me-
give him a call now that they're talking about conscription.
Uh.
I don't,
Okay, but
I don't know if
except
there's-
I don't know if that'll make a difference. He'll probably be excited about it. Right? Yeah. See, I told you. Told you they weren't going to let
doesn't-
the dollar go down. They're going to conscript us before they let that sucker drop. Some people are for that. And if you
because
think
we
that-
all know that if an army made of people that don't want to be there is stronger than an army of people that do want to be there, or that's their best option to be there. Right? We all know that it works when people don't want to be there.
so
I'm
back
not
to
very
the-
informed on these things, so I might be saying very naive things, but I'm just.
And me too. Me too. You know what? Me too. I just have been watching too long to know that fiat currencies at this point are highly more speculative than digital assets. Because that's where we're at. That's where we're at. So exit strategy is not based, when it comes to metals, exit strategy is not based on how much is it worth in accordance to the fiat. It is how much are they worth in comparison to each other. Silver versus gold. So this is the chart that we're watching. The ratio. This big drop is a sign of things to come. And right now we're sitting underneath this resistance. This long line here. We are not likely to get back up above that as these it's not really an energy crisis. It's a fabricated energy crisis. It really is. Just go and look at how the Soviet regime, the Bolsheviks, just go look at how they orchestrated Holodomor. A little bit of, it doesn't take much. It's not that hidden. They'll hide who was responsible, who was running the Bolsheviks. They'll hide that because it's the same people that are running the Federal Reserve. But that the Bolsheviks, and I'm on YouTube doing this, so the Bolsheviks, they orchestrated the famine that killed 6 million or more. I think it was like, what was Holodomor anyway? I think it was more than 6 million. When the war efforts were occurring, the Bolsheviks went to the farmers of Ukraine first, not the ones of Russia, of that realm. They went specifically to that province. They said, You're going to need to surrender all of your machinery because we need the metal for the war efforts. And the farmers replied, who's going to grow the food? Because we need the machinery so that we can continue producing food for people. You know that food is going to be important, right? And the response from the Bolsheviks was, and I quote, Moscow will provide. And that's how Holodomor came about. They fabricated the famine. The oil crisis that everybody is all up in arms about, you know, it's just the other day, I was talking to somebody who was super concerned about the energy crisis. And I said, you know, it's fabricated, right? Audrey Lynn put it up in the Next Gen Merchants. There's an alternative. We don't need to have the Strait of Hormuz. You know, we can just build a pipeline from Bruderheim to the coast. It's okay, folks. There is no energy crisis. It's all fabricated. It's all illusionary. But as a result, we can expect through this fabricated energy crisis that there will be great unrest. In fact, and I've been saying this since 2009. 2008 is when I found out about the digital ID. That was before I started diving into the stock market crash of 2008. It was in 2009 that I figured out what they did. And then I was like, oh, they're going to do it again so that the crisis is so severe that people will scream and cry and have, you know, a toddler's temper tantrum over the dollars they hold in their accounts, saying, crying to the government for a solution. And the solution will be a digital currency that you'll have to get a digital ID. It'll just be how that has to be the way it's going to go, because that's how they do it all the time. This is a, you know, and I had watched The Matrix enough times to also know that these resets are not new. They're cyclical. As the saying is in Battlestar Galactica, all of this has happened before, and all of it will happen again. We're on a merry-go-round. That's why they call them revolutions. They just go around and around and around and around and around. And my argument is that we don't have to do that. My argument is that we can find a way to do it alternatively. We don't have to go that way. You are going to want to be, I don't know if you can, Zoa, but you are going to want to be there on Wednesday. And that, yeah. Because I'm going to be talking about the word alternate.
Okay. I have another question. Is the exit strategy in silver and gold just between them, or is there an exit strategy out of metals, period?
Yeah, it is. There are two phases to this exit strategy that I'm planning. Strategy number one, the first phase, is moving silver into gold. And the reason why is because gold is definitely a good thing to have lots of. There's nothing wrong with that. In fact, gold is the currency of kings. If you have a sizable amount of gold, that puts you into a position where you can actually help out a town. You can make an investment with gold, say for instance in water purification. That would be very good for a town. Not a lot of towns have that right now. I know a gentleman that works northeast of Fort Saskatchewan. I can't remember the name of the town. But out there, he
Lamont?
has, further.
Oh, Redwater?
Redwater, thank you. He works for the town. And their public works are in shambles. Think Atlas Shrugged. They are not in a good position at all. And he's astonished that the water is allowed to run through the pipes. And he says if it continues, the pipes are actually going to break because that water's not supposed to go through them. That's how bad it is. So when we have those kinds of things occurring, it is up to we, the people, the salt of the earth, to take responsibility for the fact that that town should never have been elected. The people on that council should never have had the privilege of putting their name on a ballot, never mind be elected. When this energy crisis is at its peak, the valuation of gold and silver will be through the roof simply because the energy crisis and the data centers being built and the consumption that we need all of the silver and gold and water we can possibly get so that we can fight the big enemy with the bigger AI. These two things are going to be used hand in hand to create the crisis that is necessary for the people to scream and cry for a solution, which is, of course, in the back door, in the back pocket. And the first phase of your exit will be when the ratio between silver and gold allows you to get gold for cheap. Because if you think about it, if you got silver in April of 2025, regardless of the price, if you got silver back then, you got silver when it was less than 1% the price of gold. That means that you'll be getting gold on sale. Like, you know what? Let's just go to the ratio of 25. So we're not even going to go down to 15 where nature indicates it should be. Let's just go to 25 ounces per ounce of gold. You'll be getting gold 76% off. That's phase one of your exit strategy. Because now you can help a community. Now you can actually do something with that gold. And it's not that the silver, you can't do things with it, but that the silver is meant for you to buy things from farmers. The gold is meant for you to buy infrastructure for your community. The second phase of that is going to be, it will require that I bring up the chart for gold going back to the end of the 70s. So we go back in time, and can I even do that with this chart? Why, yes I can. On the daily chart, we can go back in time. Look what happened after the depegging of gold from, or the depegging of the dollar from gold that occurred in here. Gold went up 17x. And someone's playing guitar.
Oh, sorry.
Okay, thanks, yeah. So that 17x went up. Gold peaked out January 16th, 1980. What happened after that? What was the response? What was the global response to this $867 ounce of gold? Nobody was investing in the US dollar. Nobody was investing in fiats at all. And what had to occur in order for that investment to return, keep in mind, in order for the US government to guarantee its bonds to the investors, they had to invite foreign investment back into the fold. And to do that, they had to raise the interest rates. So the interest rates went up 22%. I can remember as a very young boy, because I have a weird way of remembering things, and I didn't understand it at the when it occurred, but I remember the words. That the mortgage rates were 25%. Well, the price of a house went down considerably. In fact, my uncle bought a house where, and I went and looked at this house, I would say around 2014, 2015. The plot of land and the house was $650,000. He bought it. I would say, where would that been? Jeremy would have been just 2 years old, so 84 or something like that. He bought that house for $17,000. And the interest rates go up, it makes housing unaffordable. Well, no one's going to get a mortgage. So in order for people to get a mortgage, the banks have to sell houses. They can't approve mortgages for huge amounts. And so then in order for realtors to make money, in order for real estate developers to make money, they got to bring down the price of their product. Supply and demand. Fast forward to today. Where are we headed? Well, the next marker that I'm watching for, where it's kind of be like, yeah, I would definitely be exiting at 10 grand. After that, remember, you're going to have a whole bunch of gold. And you're not going to be paying attention to how much it is in dollars. Why? Because that's when you get land. When the interest rates are through the roof and nobody can afford it, you're going to go and exit phase 2. And you're going to be getting land. And or that infrastructure for your town. Because I mean, if you've got gold and you can invest in an infrastructure for a town, now that is a business asset. I mean, think about it. If you're taking care of the waterworks for 10,000 people, that's a business opportunity. That is a major investment that you can make that accomplishes 2 things. Number 1, it puts your money to work and it keeps your community healthy.
Question.
Yeah.
What is the likelihood, possibility that if the gold silver ratio drops to 25, that it'll jump back up to, say, 70 to 1? Because the average has been about 70 to 1, I think.
Yeah. And
So,
I expect that.
which means that rather than silver plummeting in value, gold goes way beyond 10,000. Way
Yep.
beyond.
That's why when that happens, you better be ready. That's why Audrey Lynn has a text-friendly relationship with her local dealer. Because and he's great. Because whenever there's a new high or a low, he texts her.
Sure.
Yeah. So your exit strategy needs to be established and secured. Make sure that you've got the relationships necessary to make those trades. And I'm in 100% agreement, Ian, that, while nature will draw that ratio towards where it's supposed to be, it will not stay there. It'll be a whiplash.
So the possibility that gold could, okay, so if for instance, silver is going to jump to $700 an ounce, basically based on your comment earlier. And we could go back to a 70 to 1 ratio. That's $49,000 an ounce for gold.
Mm-hmm.
Okay. So if that happens, we could have a repeat of the late 70s, early 80s, where gold peaks. They bring up the interest rate again on cash money. Property values plummet. Great time to sell all your gold and buy property.
Yep.
Except that you're not going to be the only one doing that. You're going to have the multinational companies that are going to be doing that, and because that's what's happening now, even.
And there is another exit strategy that I have been teaching since 2017.
What's that?
Constitutional conventions.
Say that again, the term?
Constitutional conventions.
So how does that relate to property or metals?
Because you create the jurisdiction and you make sure that those multinationals do business elsewhere.
Okay, so you're talking about, for instance, you're talking about a county. Let's say the Brazeau County, for instance, where you
Yep.
are. I think you're in Brazeau, aren't you?
Yep. Clearwater, but
Clearwater,
yep, just
okay.
south of it.
So anyhow, either one. So all the constituents of those, or the majority of them, have a constitutional convention,
Mhm.
and they determine that real estate in the county must remain locally owned and operated.
Yes,
Yeah, that's what you're saying?
correct.
So you're restricting the homeowners from buying, from selling rather, to anybody.
No, I would say that it would be prudent, jurisprudent, to restrict homeowners from selling to our adversary.
Sure, you know, you're getting that in cities now. You're getting people, communities are fighting this, what they call it, infill
Yes.
construction. You're getting communities rising up and having homeowners sign restrictive covenants.
Yep.
So, which is what essentially the same idea. Where a
Mhm.
restrictive covenant is saying that the homeowner will not sell to a developer.
That's right.
You know, they'll sell to a homeowner or something to that effect.
Correct.
Same idea here.
Absolutely. And in fact, to extend it beyond just the sale of property, don't do any business with them.
Sure.
Yeah. No, believe it or not, the UNDRIP has no force or effect except by the consent of the governed, meaning that you're electing officials for your county or your town or whatever else who give oath to the adversary. And you can
Thank you.
stop anytime. It's like I saw this clip of the police. It's just disgusting. They're wearing police vests. They got police, great big letters going across their chest and their back, and they're up on a stage. And there's a drag queen dancing in front of them, looking like a Fruit Loop. And all the police are going like this and clapping their hands as this demonstration is going on where they're all celebrating Pride Day or whatever. Vincent Gersey is a retired police officer, and he is disgusted, and he shares that, and he says, I can't believe that this is what it's come to. And I said, ... by the consent of the governed.
Comes back to that posting that Audrey Lynn, was it you that put that up?
Which one?
Yeah, Audrey Lynn. Yeah, the crucifixion of Christ.
Mm.
I have a family to feed. He didn't do what they told him to. I have to think of my future. If I don't do this, I'll get fired. That's what some police officers think. Well, part of the job. You
Yep.
got to do it, or I'll get fired or get written up or whatever. That was a great post. That's how it happened during the Nazis. You know,
Yep.
it's happened throughout history multiple times.
Oh,
And will
I
again.
I sat in that. I don't know, Ian. Did you and I visit when I was at Susan's shop there, on Boutique on First?
Well, if we met, we met at Ricky's.
correct. Yes.
And you may
I
have
wasn't
gone there
sure you had
afterwards or before.
I met in 2020. Yeah, you know what? Actually, I don't think we met before, but at that time when I was there, Susan Baker had a shop on 101st, just east of 75th Street, and she had a little tiny storage room back there. And because I was helping her out with lawful noncompliance to all of the COVID restrictions through 2020, she let me have an office in her boutique shop. So I was back in there, and I met with, I don't know, probably 100 people out of that little office, tiny, and it was a storage room converted into an office. And I remember sitting and sitting across the room from a mother. She had to have been early 50s, maybe mid 50s. Her and her husband were looking for ways to get out of, like, her son had to get a vaccine in order to continue his Olympic career. He was an Olympian. He was at all kinds of different competitions between Olympics. And they needed him to maintain that because they had invested so much. It's the same mentality. It's the same mentality. And when I showed her what it is that she could do to help her son, she saw all of the writing and the notice and going through it, and I walked her through it. I read each paragraph with her. When it was all done, she said, maybe do you know, is there a way that I can get a fake passport for him? A fake paperwork? And I immediately kind of pushed away from the table. I leaned back and I said, "No, I'm not going to do that." And I said, and I feel bad for not explaining to you the severity of this. No, I'm not going to help you identify yourself as, or help your son identify himself as someone else's property. I'm not going to do it. And you know what she said to me when I said no? But my husband and I have invested so much into our son. No wonder Jesus wept when he looked over Jerusalem. That's the mentality. That's that base just above the beast mentality. I mean, that's how a dog behaves.
It's less than a dog. Dogs don't lie.
Dogs will protect their young.
Yes, when there's a threat. How does one minister to that mentality? How do you help them? How do you, I don't know. And I think that was one of the reasons why, like, 2020 and 2021 for me were quite dark, because that was the symptom that I said. I'm telling you an extreme story, but that same mentality was amongst most of the people that I met within that office.
Yeah, it's the same thing you're going to see with regarding the mark of the beast. You know, people won't be able to buy or sell without the mark. You know,
Yep.
whatever that is. I have my ideas, but so people are going to capitulate.
Mhm.
That's another illustration of that. It's happened, as I said earlier, all throughout history. It's going to continue to happen again. Going back to your use of the word revolution. Yeah.
Mhm.
So yeah, it's going to happen. The only thing you do is, I think it's in Ezekiel or Jeremiah, where God talks to the prophet about being a watchman. You know, if a watchman's on the roof on the wall of the city, and he warns the people, and they respond, then he's done his job and he's saved them. If he doesn't warn the people, he has not done his job, and their blood will be on his hands.
Yeah.
But if he does warn them and the people do nothing, their blood is on their own lives, on their own hands. So that's where the honor and the integrity comes in, is that doing your job, warn people, you know, here's the warning, here's the danger in what you're doing, and leave it with them. They've been warned.
You know, you've told me that before, Ian, and today it really lands for me. Thank you for that. I felt like it was futile. So much of that time, I felt like everything I was doing was futile. And that definitely encourages me.
Good.
Thank
Be
you.
encouraged.
Thank you. Earlier, Gary, you had put your hand up. Was that you saying goodbye soon, or did you have something else?
Yeah, I was having thoughts. A community that I know a fair amount of people in, well, Grand Prairie, when the mandates were being enforced to go on certain sites and whatnot, there was a doctor in that community signing the forms of people that got the jab, but they didn't get the jab. And it's a little different than what we've been talking about here. But here's these, well, the doctor doing it to begin with versus standing and being a man performing a crime, and then all these people carrying around these fake, whatever you want to call the fake document that they got the job and they can participate with the evil. I don't know that none of them were standing in any integrity or authentic beings. I guess it's something that came up for me that I've, and there's quite a number of them, I guess, in that community that did that form so they could go out and work at certain sites there for whatever that was indulged in for a 6-month or a year period.
Yeah, you know, I when considering, and that again, I shared an extreme case. Most of the people that I met with, they legitimately were up against the wall. They had no other option. It was either get it or I lose my job. I don't have anything else lined up. You know, my profession is limited to this particular job, and if I can't do it here, it's not like I can go down the street and find another employer because he's going to ask me the same thing. That was where, you know, I saw exactly they were up against the wall. I wouldn't have judged someone for going out and getting a fake paperwork for that kind of thing, because I mean you got to provide for your family. Pick your battles, so to speak. Your son, the going to the Olympics, you guess what? He can do something else with his life, right? He come back to it even if you wanted. My sadness was in that no, you're not getting it here. We need to not comply with this. We need to stand up. We need to let them know that the governed do not consent. That's what we're trying to do here. Have a good rest of the day, Ian. We're done. Oh, we went for an hour and 50 minutes. It was awesome. Thank you, everybody.
I'm going to. We'll see you on
Have a
Wednesday.
good.
Or maybe see you tomorrow.
Yeah, you bet.